Hi everyone, this is a technical analysis on the S&P 500. Let's start with some fundamental background first. Last week, the Fed hiked interest rates by 25 bps as widely expected, keeping everything unchanged. Fed Chair Powell reiterated the data dependency and kept all the options on the table. The economic data since the FOMC meeting has been pretty solid, and the labor market indicators keep on running hot. This week, we got a sell-off that began with the rating agency Fitch downgrading US credit rating to AA plus from AAA and then extended further as the US ADP report came in hot again. Looking at the daily chart, we can see that we had already a divergence here with the MACD coming into the 46.28 resistance level. This is generally a sign of weakening momentum, often followed by pullbacks or reversals. If this is a pullback, we should see the buyers piling in here near the 44.94 support. The sellers, on the other hand, will want to see the price breaking below the support to increase the selling pressure and take the S&P 500 into the trend line. Looking at the 4-hour chart, we can see that the S&P 500 recently broke below a key support zone here and is now pulling back to retest it. This is where we should see the sellers leaning on this support zone resistance, where we can find the confluence with the 38.2% Fibonacci retracement level and the red 21 moving average. The buyers, on the other hand, will need to break above this resistance with conviction to invalidate the bearish setup and target a break above the 46.28 high. On the 1-hour chart, we can see more closely the current pullback towards the resistance with a counted trend line defining the short-term bullish momentum, as we can also see from the crossover of the moving averages. If the price break below the counted trend line, the sellers are likely to pile in and target a break below the 44.94 support. Today, all eyes will be on the US NFP report. The Fed will see another NFP report before the next meeting, so this one won't decide what they are going to do, but it can change market expectations nonetheless. It's hard to see what the market is going to do with this data, but a strong report should weigh on the S&P 500 as the market would expect the Fed to remain hawkish, and weak readings are likely to cause a sell-off as the market may start to fear a recession on the horizon. The technicals here should be more helpful to manage risk and position in line with the flow.